Should we buy or sell the Philippines ETF? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So we have Philippines in South Asia. 1% from the 52-week lows, and we are 26% away from the highs. When we compare that against the average of all of these country ETFs, then we see that it is pretty close to the average. This is the big picture of Philippines going way back here to 2010. There have been these pretty good time cycles in green: rise, decline, rise, decline, rise, decline, rise, decline. The time cycles suggest that we are supposed to enter a rising phase towards autumn. So that is something to have on our radar. What is especially interesting with this ETF, this stock market, is that it obviously moves in cycles. Hence, it's a buy low, sell high type of market. And we are currently very low. When we zoom in here, we see that we have lost all kinds of support levels. You could make the case that we have fallen down to some potential, but to be confirmed, horizontal support around here. So this is an interesting territory. And when we go here to the daily data points, you see that we are below all the moving averages. If we look at the RSIs and the PPOs, the weeklies, we see that regarding RSI, the only time we have had lower RSI was back here during the C-19 lockdown. Previous times, like back here in 2018, we had a pretty nice rally at these lows. When we go back here to 2015, let's find it. Around here, you also got a bounce. The same thing with the 20, 50, 100, and 200 week PPOs. The current levels usually form lows, except during the C-19 lockdown, but that was a very special situation. Going to the daily data points, we are very, very low, especially looking here at the longer term and moving averages. We are very due some mean reversion to the upside. So historically speaking, these kinds of readings have not been safe for bears. So in my notes here, I write that we are at RSI and PPO support, especially here on the weeklies. So I give the bulls a 6 here on the technicals. Another thing is that we have time cycles bullish. So that is definitively something that we also want to have on our radar, but that is way more longer term. Let's look at the seasonality for the Philippines. So we get the average data here to the right in blue over the last 7 years, green the last 5, and red the last 10 years. So you do see that, generally speaking, the seasonality is bearish leading into later August. That also, however, matches with what we saw with the new time cycle that is about to begin, so it fits. To the left here, over the last 5 years, July is a weak month, but August is one of the strongest. Over the last 10 years, then we do see that July is very 50-50, and August and September are weaker. And over the last 13 years, we do see that August is a weak month, and October obviously is a very, very, very strong. So I give the bears here a -4 on seasonality. Let's look at the fundamentals. So I am comparing Philippines with America. So let's go to performance year to date, -21% versus -20%. Beta is much lower than America, 59 versus 99. Dividend yield, 0.87% versus 1.22. So if we go and look at the price earnings, you see 24.45 versus 21.7. So notwithstanding the pullback, Philippines stock market is more richly valued. So here are the companies in the ETF. Some of you might be familiar with some of these. Looking at the sector breakdown, you do see that financial services are pretty big, 45%. Retail trade, 13%, and then you have utilities. So one of the quote-unquote safe sectors, utilities, and also communications, also viewed as defensive. They are pretty high up, so it sort of offsets the perceived risk with the financial services sector exposure. And here you can see the market cap breakdown, much more diversified than you see with the large caps by ETF. I do give the fundamentals here -3, so 3 to the bears in this case. So let's look at relative performance. So long term, we do have 19% with the S&P 500, 25% with China, and 88% with Thailand, and -23% here with the dollar index. Looking at the daily data points, then we have 87% with America, 57% here with China, 86% with Thailand, and -93% here with the dollar index. When we look at the long-term correlation here with the dollar index, we do see that we are at a very low end of that range. So looking short and long-term, the strongest correlation we do get is with Thailand. So what happened with the Thailand ETF is very likely going to affect the Philippines. So here is Thailand weekly data points. Now, we do have something that is a bit head and shoulder-ish. It is not a textbook head and shoulders, but you could argue that we do have a head and shoulder-ish pattern, notwithstanding that we have this high back here. But yeah, that it is a bearish pattern. You could make the case that we have fallen down to a potential support level around here. At least it is a level where there's been buys in the past. So there is the expectation at least maybe of a bounce. Looking at RSI and the PPO, we are at support-ish levels. So yeah, we are just very much due a rally in Thailand as well. So this notion that because we are very oversold that we are due a rally, that is not simply based on the indicator as such, it's based on the psychology around the indicator, because those who have shorted these markets, they have profits and they want to also close out the maximum amount of profits. So similar to how it is very dangerous to stay long when a stock is very overbought and very bubblish, it is also very dangerous to stay short when you have any kind of security that is extremely oversold and starting to set records. That is when the risk of a squeeze is very, very high. So anyway, here is the relationship between Philippines and Thailand. In this case, you could argue that we have fallen down to a horizontal support-ish level for the Philippines. But it's a bit noisy, for sure. So it's not like a clean signal. So let's get the seasonality here for the pair. Yeah, the seasonality is definitively favorable to Thailand. So the Philippines usually weakens against Thailand leading into 18th of August. Here I am comparing the Philippines with the S&P 500. So we have seen a very substantial downtrend. We have something that potentially could become a bit double bottom-ish. So let me draw it in, this low here and this. We do see a change because now there is some low forming behavior, but if you look here, this is just a complete waterfall. So it's an interesting level. But as we looked at the fundamentals when comparing Philippines to the SPY, you don't really have a strong fundamental case for buying Philippines. Looking at the seasonality, it is over the last 10 years, we do see that it's yeah, a bit flattish leading into mid-August. But in blue here over the last 7 years and green over the last 5 years, Philippines usually underperforms America quite systematically late into August. So I give the bulls 2 here on relative performance. So we do end up with a 0.3 in favor of the bulls. The key entry signal stop loss is RSI and PPO support on the weeklies. So yes, there are more reasons to be bullish than bearish on the Philippines, but it's not a very strong case. Given that we have some time left, let's run through some stock markets around the world. So here is America, the S&P 500. Looking at the wicks here on the weekly data points, we do see that there are buyers in this territory. So that's interesting. Nothing roaringly bullish, but something that will motivate some bears to take profits. Looking here at the dailies, so this low is higher than this one. But we do see that if we mark in these highest, getting the right color as well, like this high level is very much a ceiling. So definitely, we want to look very closely at what happens when the bulls get up there, if they do. Here is the Polish stock market. We are almost taking out the C19 lockdown lows, so definitively very, very low here. Looking at RSI, we are at, and also the PPOs, we are in a zone that has been more favorable to the bulls than the bears. So definitively we are so due that bear market rally in a bunch of markets really. Let's take a trip to China. Yeah, so China, it did have quite a few weeks where you had a nice rally, outperforming a bunch of other stock markets. But then last week, this candlestick just eviscerated those gains. So it goes to show you that you must have stops. There's no alternative to stop levels. Let's look at EWA, which is Australia. So price has fallen down to a zone that, historically, it does have a bit of a tendency to attract buyers. Like here, it formed a low around the territory here as well, back here. So that doesn't mean that the bears can't push it lower. It is just that there have been quite a few times where bulls have stepped in. So let's look a bit here at... Yeah, looking at the RSI and the PPOs, yes, we have been lower in the past. Then again, this is also a dangerous territory to be very aggressively bearish, or certainly to add to the bearish position. Here is United Arab Emirates. So this is an example of the other trade where you have, let's get the RSI. You see that we were extremely high on RSI and also the PPOs, historically at a very high risk level. So we were due a pullback, and we have definitively gotten that pullback now. So yeah, but if you look here at United Arab Emirates, it has fallen down to a level where that is technically key. If you look back here and here as well, key level, even here. So yeah. If this market were to form some kind of low around that territory, then we could get a bit of a messy cup and handle pattern, which is bullish. Here is Germany on the weekly data points. Massive sell-off. Let's look at looking at RSI and the PPO. Here again, we are very low. Yes, we were lower during the 2008 global financial crisis and the C19 lockdown. In all those other occurrences, it was simply very dangerous to certainly create new short positions at these kinds of very depressed bearish levels. So yeah, we definitively have a lot of extreme readings now in the market. If this is as bad as the global financial crisis in 2008 slash '09, then we could expect significantly lower levels. We could expect, some panic selling. However, if this is not like those that time or the Z19 lockdown, then this is a dangerous time to be very bearish. It's the time to look for bullish opportunities. So yeah, but whatever one does, one always uses a stop loss and a clean entry signal.